Hi, so today we're going to be talking about my thesis behind Oceaneering International and the inflection point that they're currently going through. This is my third largest position, but the top three positions in my portfolio are all around 12 to 13%. I think this is more on the 12 range, which is why it's the third largest. But I'll likely be exercising some call contracts on them and probably jump it up to my largest position. It is probably my favorite stock on the stock market right now. I really like the thesis, and I've studied the company very in depth. So we can just jump into it. So Oceaneering is a global technology and engineering company, and they're best known for their advanced underwater robotics. So they have a very strong niche in this industry. So currently, their ROVs, remotely operated vehicles, are normally used for offshore oil and gas infrastructure. So, in simple terms, they kind of build, design, and operate these automated robots that go underwater and fix subsea hardware that energy companies need to drill, construct, and maintain deep water ocean rigs. So, offshore energy is their core revenue driver, but the inflection point that I'm paying attention to is they're increasingly using their expertise in these underwater niches to apply it to defense technology. So this warrants a much higher valuation for this subset, this vertical they're growing. So I wrote an article on them. So we'll just go over the article just as a basic basis for like the thesis and whatnot. So yeah, they're moving beyond their traditional identity as a cyclical oilfield service provider to become a critical pillar in Western subsea warfare and global industrial automation. So the urgent mandate to protect critical undersea infrastructure from Russian and Chinese sabotage efforts creates a fully funded procurement priority for the U.S. government. So this is driven by the U.S. Navy's 350 million subsea to space framework and the launch of NATO's Operation Baltic Sentry. So what's been going on is Russia and China have been wanting a war of attrition. They want to stop us from knowledge, technology, those types of things. They don't want to directly approach us in war. So what they have been doing is following increasing acts of sabotage against critical undersea infrastructure, including pipelines and internet cables. Allies agreed to enhance NATO's presence in the Baltic Sea region and launch a multi-domain activity called the Baltic Sentry in January 2025. So this is regarding the protection of critical undersea infrastructure by deploying a range of assets, including frigates, maritime patrol, and a small craft of naval drones. NATO is working with allies to integrate national surveillance assets, improving the ability to detect threats to critical undersea infrastructure and respond if required. So there is only, I think, about 50 undersea subsea internet cables that run to the United States. So if these cables are attacked or disrupted, it really messes, like, it is a very strong national security priority to get these handled and to make sure that these are not damaged, because this would, I mean, it's pretty obvious enough. Huge internet cables, huge pipelines, if they're attacking this, it's just a very, very big problem for us. And it, this type of macro, like, this is the thematic relevance of it, and this is the inflection point that's changing this business, is because macro speaking, there's a lot of countries that are wanting this type of protection, and Oceaneering is uniquely positioned to use their technological expertise in subsea robotics to solve the current gaps in our capabilities. So, like I said, they have a near 50% market share in subsea robotics drill support and host the world's largest fleet of 250 work class ROVs, providing a high margin cash flow that supports their expansion into Western defense supply chain. So we can just go over a basic business overview. So their largest segment is their subsea robotics. So this is really the cash cow of their business. Um, so they have very large EBITDA margins, near 36%, and they have a massive, massive fleet. And, like, I don't want to say they have a monopoly over it, because they don't, but they are one of the largest. Actually, I think they are the largest provider of these services globally. So the interesting thing that I've seen from this segment is that revenues are not growing that fast, but what they have seen is a very large uptick in revenue per day. So their utilization of these fleets is decreasing, but their pricing power is increasing. So this kind of offsets that decline in growth, and what it does show is that when that utilization does increase, they have much more pricing power. And what this pricing power is doing is it's really drove up margins. And what this segment serves as just kind of like a cash floor for them to then invest in their research and development into defense technologies. So they also do offshore projects. So this is where they take ownership of the entire scope of the work. So their Subsea Robotics is more of like a rental service. Like they put out their ROVs, and then they send it to like an oil rig or whatever, and then the oil rig uses them for whatever services they need on the infrastructure. But their offshore oil segment is more like, or sorry, offshore product segment is more on like they take the entire work project and they do it themselves. So that's what I'm saying. They bring in their own equipment and crews to execute the tasks. So subsea construction, oil well intervention, inspections and repairs. So this segment, slightly lower margins, and they grew year over year a little bit in the past quarter, but this last quarter, so I wrote this prior to the earnings report, and we'll go over that as well. But this article just kind of serves as a general overview. So their offshore projects, I'm not really worried about it. It has a very lumpy revenue recognition, and that's because they're not locked into like large contracts that they are with Subsea Robotics. So that's the big part of their business is the Subsea Robotics just provides a very, very nice cash cushion for them. Long contracts they have, and it's very reliable. Their offshore project segment, when I say revenue is lumpy, because they win a contract, they win a project, they go do that project, and then they have to wait a little bit for the next project. It's very, very lumpy. So the quarter over quarter action of this is not really that important, and it is a smaller part of revenue. Yeah, 23% of revenue. So it is a smaller part of their business. Subsea Robotics is more 30%. So I'm not so much worried about their offshore projects group. It's not the biggest concern of mine, but the high EBITDA margins of their Subsea Robotics is really the seller on this. So they also have their manufactured product segment. So in this part of their business, they manufacture some of the vital components in Subsea Robotics, such as the umbilical cable systems and other high-end connectors and valves. So these are very niche properties and products in this segment. So I believe I go more into this later in the article. This is really just a general overview. They have their integrity management and digital solutions vertical. So they produce 3D replicas and analysis of offshore assets in order to predict what parts need fixing. So I kind of like this segment. It's pretty interesting. They have a small operating margin, but going forward, they have talked about integrating more artificial intelligence and machine learning in this. So I think that could be interesting, but it's only 9% of total revenue, so I'm not too worried about it. The largest inflection is from their aerospace and defense segment. So this is their primary growth engine. So this generated 126 million in revenue and is growing at 27% year over year. And I believe this has accelerated the next quarter. We'll go over that later. So currently this only represents 17% of their total revenue, but this is definitely going to be changing, especially with how fast it's growing in comparison to the other segments. So this is the really inflection point in their business, is this segment is growing rapidly because of the macro changes and the need for this type of technology. It's very, very interesting. So we can go more into the defense pivot. So throughout 2024 and 2025, intelligence agencies have observed unusual patterns of activity near critical transatlantic fiber optic cables and energy pipelines. Incidents involving the Balta connector pipeline and Nordic telecommunication cables demonstrated a capability and willingness to destruct infrastructure in the gray zone. So gray zones is like it's international waters. Nobody really owns it. So inflict massive economic damage but fall short of an armed attack. That's what I was talking about with China and Russia, is they have a willingness to disrupt our economic activity, but they don't want an armed attack. So this is very interesting. It's just an interesting thing that they're doing, and we need to obviously counteract this. So the problem for NATO and the United States, the ocean is way too large to just have a bunch of manned vessels just patrolling this type of stuff. It's not worth it. It's not economic. So this creates a perfect opportunity for OII to apply their specialties in subsea robotics to these defense applications. The U.S. Navy adopted a doctrine of distributed maritime operations and subsea to space integration. So this requires satellites capable of monitoring surface vessel activity, as well as unmanned surface vessels that can act as communication gateways. Additionally, it necessitates the use of automated underwater vehicles and other subsea systems that can provide a more specific monitoring services. So their Oceaneering's competency in remote operations and controlling subsea assets from onshore centers places them at the perfect intersection of these technologies. So NATO's fiscal year 2026 military budget and the U.S. Navy's requests prioritize unmanned vehicles and classified efforts in their R&D portfolio. So it's very interesting, and Oceaneering has a lot of key competitive advantages in this field. So I think one of the most interesting things about their company is that they leverage their research and development across multiple consumer bases. So the biggest example of this is the Freedom AUV product. So this is that. So this is the drone that is going to be applied to defense technologies. And the most interesting thing about this is that, these commercial, they need a vehicle. So hold on, let me take a back step. So the most interesting part about this is that they initially funded this through major energy companies, and it was a joint industry project, and these commercial clients need a vehicle capable of autonomous pipeline tracking, obstacle avoidance, and automatic docking to reduce their operational costs. So these were being used for energy cases in the beginning. So by the time the Navy needed a similar capability, Oceaneering had already achieved technological readiness with their commercial partnerships, and then they began spinning off this type of technology to then apply it to more defense applications. So it kind of mirrors the success of Anduril, where they eroded market share from established primes by bypassing government-funded R&D in favor of deploying commercially mature mission-ready systems. So it's very interesting because the primes, they take very, very long for research and development, and this type of stuff takes years to really get moving. And Oceaneering already has a very large manufacturing base for this type of stuff, and clearly they can apply their competencies in the energy field to the defense segment. So this is very, very interesting. So the Freedom UAV systems live on the seabed, and they dock at battery stations to recharge and upload data, only resurfacing every few months for maintenance. So this is very interesting because the Navy can have these type of surveillance on these critical cable routes at a very large fraction of the cost of like traditional vessels that would just monitor it constantly. So the Freedom UAV system is unlike conventional torpedo-shaped AUVs that rely on hydrodynamic lift, and they must maintain forward momentum. So the interesting thing about this is it has a specialized design that allows for hover capabilities and 6 degrees of maneuverability. So it can stop and it can monitor things, and then it can do intervention tasks where it must see what the problems are and stuff. So, in early fiscal year 2025, the Defense Innovation Unit awarded Oceaneering a contract to build the Freedom AUV for the U.S. Navy. So, management stated this was the largest initial contract value in the history of this business segment. So, what this does, and this is what I was talking about, this Seabed to space thing, the contract involves not just vehicles, but the establishment of an onshore remote operations center for the Navy. So, OII is not just providing the hardware vendor, they're not just a hardware vendor. They're an actual operational partner for the U.S. Navy. So they've logged over 120,000 hours of remote operations for commercial energy clients, and they're applying these same type of capabilities for the Navy. So the Navy is clearly adopting a similar type of service model in this defense segment, and this is going to provide a very high margin revenue stream going forward. So once they integrate Oceaneering's command and control infrastructure into the Navy's workflow, displacement is going to become very, very difficult. So Oceaneering does have a moat around this, in my opinion. So the unit cost is estimated to be in the multi-million-dollar range. So a fleet of just 10 to 20 units combined with the operational servicing creates a very large new revenue for this segment going into fiscal year 2026. So their automated systems and this Freedom AUV system is really the bread and butter of this segment. But they also do manage the U.S. Navy submarine rescue diving and recompression system, and also just some kind of interesting, like, very specific niche tasks for the defense segment. So they secured a $33 million contract to manufacture this support equipment for Virginia-class submarines, and this integrates the company into the supply chain of the Navy's primary attack submarine platform. So as the Navy ramps up production and prepares for the Columbia-class ballistic missile submarines, Oceaneering's role in maintenance support will definitely grow proportionally. On top of this, they're also a subcontractor for NASA with multiple contracts, so they're responsible for manufacturing the displays, tools, and vehicle interfaces for lunar systems. They're also a major subcontractor for the Neutral Buoyancy Laboratory, so they provide the divers, equipment, and water treatment services in order to prepare astronauts for spacewalks. So, like I've said, this is kind of similar to the offshore projects groups. Very lumpy revenue recognition, but it's just a very interesting niche that they do have. So we just look at this. Very, very interesting. Precision crafted, flight certified hardware and soft goods for crewed and unmanned missions. Very, very interesting. You can see all this. It's just an interesting niche that they have, and this you need very strong technical capabilities for this type of stuff. So the thing with them is they have very niche abilities, and they have a lot of technical expertise in this. So their subsea oil infrastructure, it's an interesting segment. It should be growing going forward. I mean, the biggest part about this is they have a lot of pricing power with this. So this is their work class ROV system. So yeah, like I've said, they have 250 fully operational systems. So very heavy duty hydraulic robots. So they're designed for depths of up to 4,000 meters. So very, very heavy systems. You can see the arms, so that makes it capable of going in and doing things, changing, fixing things in the oil infrastructure and whatnot. So their Liberty EROV system is a very interesting. It's like a subsegment of this. So it's a self-contained battery-operated work class ROV that stays on the seabed. So this and the Freedom AUV system are the next steps in this business segment. So they're eliminating the need for continuous monitoring and support, and these systems cut costs significantly, not only for OII, but also for customers. So currently around 63% of the fleet's activities tied to drill support. Like I've said, these are typically long-term contracts and can be considered sticky revenue, especially considering their dominant market share. So the other 37% is vessel-based and more volatile to short-time action. So this is what I was saying. What's interesting is that there's been a decoupling of pricing from utilization. So ROV fleet utilization declined slightly to 65%. On the other side of things, average revenue per day increased significantly, up 6% year over year. So this trend indicates that the supply of these highly specialized ROV systems is tighter than the headline numbers show, and this pricing leverage is going to be a key part in the further margin expansion of this business. So very, very interesting. We can see this right here. Revenue per day is clearly increasing, and you can see this. I mean, not so much, but margins are expected to grow because of this. It hasn't really shown in past results as much, but yeah, it's interesting, and that's not the biggest part of the thesis. The thesis is that they deserve a re-rating because of this vertical that is growing significantly fast. So they also have their manufactured product segment. So this is what I was talking about with those highly specialized valves and umbilical cords. So an umbilical is a complex composite cable that connects surface vessels to subsea equipment. So high pressure tubes that are capable of carrying hydraulic fluid and other chemicals for maintenance operations and power and data transmission. So these are the cables that actually connect to the ROVs and other types of equipment that go underwater. So this provides the chemicals that are used to operate the arms, the gas that's used to just operate the engines, all of those types of things. And it's like sometimes they have to go in and insert chemicals into like the drill, the oil infrastructure and whatnot. So those are what those types of products are used for. So they're a global leader in this market due to their capabilities in deep water, high pressure environments. On the other side of things, they have those valves. So this is the Greylock connector. It's an industry standard for high performance pipe connections. They're extremely lightweight and reliable in these harsh environments. They also have rotator technology segment, which provides control valves and other chemical injection valves that allow material to be injected into oil wells. So they've stated that pricing improvements in their Greylock and rotator product lines are a primary driver for margin expansion in this business. They also have a very interesting niche in industrial robots. So they have their Max Mover. This is an autonomous counterbalance forklift that has a payload capacity of 4,400 pounds. So right here, there's 360 degrees of LiDAR sensors. So these are automated robots that are being used in logistics and like heavy industrial movements. So this is the Unimover. This is kind of interesting. It slides under things and then lifts them up to move things around. So this is kind of useful in healthcare, light manufacturing, and hospital logistics. So it can spin in place and move laterally, which makes it capable of operating in very tight environments. They also have their compact mover. So this is a more compact version of their forklift right here. As you can see, it's a fork over leg stacker that's designed to work in environments in which a full forklift wouldn't work. So it's just kind of an interesting product segment they have. It's not the largest part of the thesis, but this is a product segment that could start growing, especially in the future. More as like this is more of a longer term thesis behind this part of their segment, because I'm not sure that these type of industrial automation technologies are really going to start to be scaled and applied yet. But it just is interesting. It's kind of the same thing with the NASA thing. They just have very interesting product segments that could grab a lot. Like they have a lot of optionality in their portfolio. And what I mean by that is they have the option to grow these technologies, and they're in interesting fields, niche fields. Very, very interesting. I'll go over the revenues myself and all the fundamental analysis. I'll dig deep into that. But I project ADTech revenues to grow 25% annually. So I think that's very, very interesting. So we could just, these are my projections. Subsea Robotics, 7%. I'm not expecting too much growth from these other segments, but like I said, that's not the biggest part of the thesis. So, yeah, that pretty much just describes the thematic relevance behind them. So we can go into their last earnings report. So this was just a few days ago. So we closed out 2025 with strong execution across the business, making continued progress against our strategic priorities. He emphasized continued pricing progression, like I was saying in my original thesis, and growing contributions from aerospace and defense. So that's their ADTech business. And they also have a very large cash balance. So I'll go more into that. So, actually, we can talk a little bit about this. So I was going over the Venezuela oil, and they kind of have some optionality with that as well. So, President Trump signed an executive order safeguarding Venezuelan oil revenue on January 9th. It reclassifies oil revenue as foreign government deposit funds held for sovereign purposes. So what this does do is it protects these funds from being seized by courts or creditors, and new operators like Chevron or OII can generate revenue without fear that is going to be instantly garnished to pay old debts. So it suspends the rule of law for legacy creditors to prioritize new production. So what this would do is this incentivizes American energy companies to go in and fix all of these oil and get it running. So what I did is I did some research on all these different pipelines, and the thing is, a lot of them are in very, very poor condition. So Oceaneering, the initial part, this is a very long-term project for the U.S. government. This is not going to be done in a year or two. So we can see there's a few, no, I mean actually a lot of these pipelines need inspection and they need fixing. So their Freedom AUV can inspect all of these very, very fast. So I estimate around 5,000 kilometers of critical export lines and viable flow lines that need inspection. So we estimate some contract value, whatever. The first phase of this would probably give around 200 million to 250 million in revenue. So OII can likely capture around 55% of this, 50 to 55% of this total addressable market in the first 18 months. And the rationale behind this is that OII is a very deep, they have a deep partnership with Chevron. Chevron accounts for around 30% of the activity there. And we estimate that OII captures around 90% of the inspection tasks from Chevron's operations. So very, very interesting. But this is just optionality in my opinion. This is not a main part of my thesis. I don't even build this into my revenue projections. But what you want to just look for is you want to look for the potential that they could expand into these things. So this is just another thing that they could do. So another part of my analysis is analyzing just kind of interesting ways of alpha. Oh, okay, so I guess they filled this application actually. It's interesting. So I looked at this like a month ago or whatever. So they had this job posting on LinkedIn, and this is kind of a good thing to do is you check LinkedIn and you see if they're hiring more people for specific things. And I saw this job posting, which is subcontracts project manager. So Oceaneering is looking for a strong candidate to be a part of an exciting opportunity to support a major Department of Defense acquisition with the skills to perform at a high level to be successful in the management of subcontract agreements and performance throughout their life cycle. So what this kind of shows me is that they're looking to hire more people to expand their ad tech business, and that is the main part of the thesis here. So that was just kind of an interesting thing. Looks like they filled this spot, so it looks like it's going well. So we can just jump into the financials. So, oh, whoops. So current market cap of 3.5 billion. So it is a mid cap. That is generally what I look to get. So the interesting thing about this is that they traded a PE of 10. This is so cheap, so cheap. This is dirt cheap, especially for a business that has a vertical that's growing at 25% a year. It's insane. Like, this is very dirt cheap valuation for them. And the interesting thing here is they're growing their margins significantly. You know, you can see return on equity, gross margins. And gross margins hasn't really ticked up that much, but I mean, they have a lot of fixed cost of goods sold. So I'm not really worried about that. The interesting thing, EBITDA margins have been expanding nicely. You look in the past, 10 net margin has been really, really low, and that's expanding nicely. Return on invested capital. So I think this is one of the most important margin ratios that I look at least. So return on invested capital is seeing how much return on investment are they getting from their further capex and further research and development. So the technologies and expansions that they are investing in, how much value are they getting from those expansions? And what we can see is they used to have an ROIC of very, very low, and it has been growing. So clearly the investments that they're making in their business are paying off very, very well. So I think that's very significant. They have a current ratio of around 2. I think that's very healthy. So what this calculates is how well they can pay off their short-term liabilities. So they have a very nice ability to pay that off. Debt to equity, I tend to want this below 1. I mean, it would be nice to have it below 0.5, but I'm not too worried about it. 0.8. I think one of the most significant things, well, first off, just look at their free cash flow. So this has been growing rapidly. So what this does give them is this gives them a further ability to buy back shares. And they have been buying back shares. I forget exactly how much they have in the past year, but it's a pretty significant amount, and I believe they're going to accelerate this in the future, especially with how large their free cash flow has been growing. So this also gives them ability for further acquisitions or further expansions in their ad tech business. So they're a very flexible company. So net debt is pretty low, 200 million, and the thing is that they have a very large cash position, and this has been growing going forward. So it's currently about 700 million. You look at the past, 500, 300, whatever. It varied. It's never been this large. That's the biggest thing. Their cash position is growing very, very rapidly. And even in the last earnings call, they talked about an ability and willingness to fund further bolt-on acquisitions for their ad tech business. So what they could do is buy maybe a sonar company, or there's a lot of things that they could do. But they could acquire these smaller companies, which then further extend their capabilities in the defense segment, and then would better well position them to win more contracts going forward. So, their financials are really nice. I'm not really paying. I have a more forward-looking lens with their revenues and whatnot, but I mean, generally, things have ticked up. It's a nice company. They got a nice balance sheet. This cash position is one of the nicest things I think about this company. Is that they just have they're very flexible. They have a lot of things that they could do. They could push buybacks if they, don't think that they have the right acquisition that they want to make right now, or they could just hold the cash position and just wait for a further acquisition. So another one of the nice things is this chart. So recently, it's just been riding this 9 EMA very, very nicely. You can even see in this last earnings report, they jumped up the morning after. And then we kind of got a big retrace of almost the entire move. And then it got bought up literally right at that 9 EMA. So it's been riding this thing nicely. So this is when we invaded Venezuela. So we had a very, very large gap up from that. And since that gap up, it's just been running so nicely. And the biggest part of this is that they're expanding off of a massive base. So you can see we ticked this, about 30.5 level twice back in 2024, and we got rejected twice off of it. So just so nice. a really nice chart, and I love how it's riding that 9 EMA. So clearly is a very strong trend. Weekly chart, we can see just massive buying volume here. This is clearly above all of the so this white line is the volume moving average. So this just takes an average of the volume in the past. So just super nice buying volume here. It's beautiful. It hasn't even tapped the 9 EMA on the weekly. It's a beautiful chart. The biggest thing is when you zoom out to a monthly here. So it has a lot of room to run. And the most significant thing is that it's broke a bunch above this 200 moving average right here. So it didn't fully tap it, but it got rejected both times right there. And if we close this month above this 200 moving average, this is very, very, very significant. So they have a lot of room to run here. So my initial place for trimming, so I use a Fibonacci retracement. So what you want to do is you take this from the top to the bottom of a large move. So we take it from the top of this peak to the bottom right there. So currently we're sitting right at that, 36.2, 38.2 level. So I want to see a break above this, but my longer term price target for this is around 60. So, and I think even at 60, it's still going to be valued at like it's going to be like a 16 PE ratio, assuming earnings just stay flat from here on. That's still dirt cheap for a defense company. So the thing about this is that companies, so like this probably isn't the best comparison, but I use Coda Octopus. So they're like a pure play defense contractor. So they operate in like sonar and whatnot, and they trade at a PE ratio of 36, price to sales of 5. So it's very obvious that defense companies, and this is just a general thing you should know, defense companies need to be valued at a higher valuation. So this company, the largest part about this is that this company deserves a re-rating because of this higher valued and higher growing, very fast growing part of their business. So it's a beautiful chart, beautiful thesis. It has a macro background. So there is a willingness from the US Navy and NATO to push these types of technologies and grow these types of technologies going forward. So there is initiatives that's going forward to pump all of these type of technologies, and they need these very fast. And Oceaneering is perfectly positioned to grow this technology and apply this to defense applications. So beautiful chart here. It's breaking out of a massive base, and it has a lot of room to run. I think this is going to be above all-time high just in no time. I don't want to say end of the year. It's probably pushing it, but going forward, this has a lot of room to run. So beautiful chart, beautiful thesis behind them. It's valued cheap, so there really isn't like that much room for downside here because they already traded a PE of 10. It's a dirt cheap company, and it's growing fast. Margins are good. Balance sheet is good. They don't have that much debt. Large cash position, and the chart is just beautiful. So overall, this is why it is one of my largest positions, especially because of this chart. It's breaking out of this massive base. So it has a lot of room to run. It's above all the moving averages on the monthly chart, which is very, very significant. So that is my thesis behind Oceaneering. If you have any questions, leave them in the comments below. I'd be happy to answer them. And yeah, thank you for watching.